So, without further ado, let me introduce our panel of experts who will join us in our discussion. First is our Vice President and Head of Research of COL Financial. As Head of Research, she handles a team of analysts who cover more than 60% of the total market capitalization of the PSEI. She regularly conducts market strategy presentations and appears in local business programs as a resource person for stock markets. So for those of you who want to catch her, you can tune into ANC every first Monday of the month. She is often the guest of all the experts also there. She was previously the head of the Chartered Financial Analysts Society of the Philippines from 2009 and 2015, and during her term, she was able to win for the country 2 global research awards, and also including the award for the most outstanding society. Ladies and gentlemen, Miss April Lin Tan. No COL financial event is complete without a treat for our traders. Our next panelist has been practicing the art and science of technical analysis since 1993. He is a teacher to many, including to myself, and he's conducted technical analysis seminars for over 200,000 traders in a span of 2 decades. He is the Chief Technical Analyst of COL Financial and has been awarded as the Best Technical Analyst for 2 straight years by the Fund Managers Association of the Philippines. What a mouthful. But FMAP manages 4 trillion pesos of the country's funds. So it's that big, right? Ladies and gentlemen, let me introduce to you Mr. Juanes G. Barredo. Last and definitely not the least is our next panelist. He believes that investing really is for everyone, regardless of income, knowledge, or experience. His experience spans 30 years, and part of it was managing one of the country's largest and most profitable funds. In fact, this fund has an asset base of around 700 billion pesos. He was also the founding president of the Fund Managers Association of the Philippines and a member of the board of directors for the Trust Association of the Philippines and the CFA Society. It is with great pleasure that I introduce to you guys Mr. Marvin V. Fausto. Okay, how are you doing, guys? How are you doing?
Good, good.
Our dear panelists. Okay. Our title for this afternoon's discussion is Change is Here, What Next? And in fact, as most of you will know, 2016 was really an exciting year, di ba? Exciting ba last year? Guys? Sarap ng lunch nyo talaga. Respond, di ba? It started when Mr. Harvey changed the winner of Miss Universe, di ba? To our very own Pia. We also elected a president that has a strong desire for change, right? In a dramatic turn of events, Britain chose to exit the EU, di ba? Unprecedented against all the analyst expectations. And also, in America, we saw them elect another controversial president with also a strong drive for change. And in 2017, we're going to feel these changes. Except, of course, yung sa Miss Universe. Kasi hindi na siyang Miss Universe. So, we've asked our COL customers a survey last week. So again, thank you for that. We asked them what they think would have the greatest impact in local equity market performance in 2017. Ano sa palagay nyo ang makakaapekto sa performance ng equity markets in 2017? Yon. And so far, 37% of you guys, which I believe is a good sample of the investing public, chose economic growth. But it's also hard to miss that you are also concerned about the letter A, Mr. President Donald J. Trump, 22%. You're also concerned about fund flows at 10%. Concerned about rising interest rates at 9%. Naks, talaga, rising interest rates. And also, letter F, 3%, the US dollar. So let's ask our panelists this afternoon. So, April. It's no surprise to us that our customers are indeed concerned about these foreign, these things that are foreign of nature. And it's easy to think because we are a small and open economy, right? We are often affected by these things more than what we want. So how does the US market look like in an America First policy?
Okay,
Ayan.
so I'd like to start out by saying that, the US, wala naman talagang problema dyan. If you look at the performance of the S&P 500, it's actually up by 242% since its low brought about by the global financial crisis. And if you look at the bottom part, you will see the return on assets. And it's at around 10%. Now, comparing it to the previous cycle, you will see that it's actually much healthier than it was before. So, to start off, the point is, wala namang problema sa US. And then, with the election of President Donald Trump, I'd like to point out, yung bottom part, no, tignan nyo yung predictions forecast change. Pansinin nyo na pataas siya kasi people feel that the election of Donald Trump is actually good for the economy. So yung kanilang GDP growth forecast, they actually increased it further post-election. So this was conducted by the Wall Street Journal.
Oh.
Despite, di ba maraming mga protest, maraming negative
Yes.
news, talagang masaya sila or they feel like Donald Trump will help the economy. And this is because he's going to do some tax reforms. He will spend more on infrastructure. And most importantly, he's not going to be a lame duck president because the Congress is comprised mostly of Republicans. Okay? And higher rates, I think, yun ang major concern now because, of course, the Fed is now expected to raise interest rates by as much as 3 times come 2017. But if you look at interest rates in the grand scheme of things, like where it came from, you will see, di ba, it's hardly going to go up. It's still very, very low. As far as US dollar is concerned, maraming nga nagbanggit na currency is one of the issues. But if you think about it, the dollar really is going to strengthen because you have the Bank of Japan, European Central Bank, and other central banks around the world that have 0 to negative interest rates. So by virtue of the differences in interest rates, the US dollar is going to be stronger, no? But, whether higher rates are going to be a problem or not, I think we should look at rates per se. 5-year US Treasuries are still less than 2%. Ang high yield credit plus 250 basis points lang over sovereign. So it's not really a lot. And I think there are still a lot of people who are very cautious, who are still in cash at this point. Because I think one of the concerns with the US looking so good, will funds flow out of, say, emerging markets like the Philippines and choose to just, invest in the US, kalimutan na tayo. The point is, there's still a lot of money in cash because investors in general are cautious. And with the US looking better, global economy will also benefit. So from cash, we expect more money to go into equities, not only in the US, but around the world, benefiting countries, not only developed countries like the US, but also emerging markets like the Philippines. Our only concern as far as the US, in the short term at least, it looks like the positives are priced in. So this is a 10-year PE band for the for the S&P 500. Now you can see that the S&P 500 is now trading at around 17.6 times PE. So it's close to the higher end of the 10-year historical average, making it a bit expensive. So in light of that, yun ang major risk na baka in the short term there might be some corrections.
So, in short, we should not worry about the US having this much economic growth, right?
Yeah, I guess the conclusion is we don't think the US will be a headwind for the Philippine market.
Right. It's not a headwind, but more like an advantage for us. Because if you improve their economy, their markets perform better, there's risk on in the world's largest investing market. So we are also going to benefit from that event, right? April. Okay, so with the U.S. markets closing in or being closer to the upper band of the PE bands, one is in the past couple of weeks we saw the markets indeed test or chart for the first time their all-time highs. Is this a sustainable rally, or are we going to see any cracks in this tremendous rally?
All right. The uptrend in the US is still working quite well, so I really don't see any major concern other than the fact that we will have short-term corrections. Recently, we've actually had a little bit of a sideways motion into the Dow and the S&P 500. And last night, the Dow was up about 180 points. So that alone is already telling you that there may be some continuity into the advance that they've been seeing. So the trend itself is quite secure. If you look at the graph you have on top, you will see the S&P 500 in the upper boundary of its range. And so I guess the only concern we have is that there can be an interim short-term correction. And you know what, if you notice in the graph below, I happen to be able to put in the Philippine index along with it. And the blue line you see right smack in the middle is when election time came around, and after that there was a post-election rally. It lasted for about 2.5 to 3 months in length. After that, you could see the Philippine market correcting for a while thereafter. And I guess the reason is because you've got a lot of hype coming into what can happen with the new president taking place. And then as they start to instill all the changes and the policy effects, and there's usually some room for a little bit of disappointment because not every single thing that was promised can materialize very quickly. So the market tends to be able to pull back a little bit in these conditions. And I think the S&P will probably reflect that in due time because it is in the high band as of the moment. So pullbacks in the S&P should be looked on as a buy.
One is, how about the US dollar?
I don't really see anything wrong with it other than it's corrected already. And if you see the graph you're looking at right now, we've seen a short-term correction into the dollar. I think what's going to happen in the next couple of weeks is that there's going to be a little bit of a rally coming off this, but perhaps not a very big one. So it'll rally first, maybe midway to its correction, and then start to consolidate. Because I think right now the anticipation for the next interest rate hike is still coming towards June or July. So we've got a little time in between for prices to be relatively stable. So I think the dollar will shelf in somewhere where it is right now, maybe just a little bit lower, but I think it should have a little recovery.
All right. Thank you very much. So there you have it, folks. The improvement in the U.S. economic performance and the seeming uptrend in their market is not a threat to us. Actually, we should welcome it because it's supposed to improve the risk appetite of the investors in the US. And while the Trump administration definitely has some controversial policies, we believe that the tax breaks or the tax policies that he intends to roll out in the US is supposed to improve further economic growth. Now, let's move on to their number one concern, which is the growth in the Philippine markets. So we ask again our audience in that short survey, how does your 2017 prospects of your business or your company or the company you work for compare to last year's? So anong tingin nyo sa trabaho nyo at sa mga negosyong pinapatakbo ninyo? And so far, 69% of all our investors answered that things are going to be better. Totoo ba yun? Yes, di ba? Yeah. Parang natutulog ng iba. Di ba? Tama? Is it going to be better? Yes, all right. So, medyo yung 6% din. Yun na yung tahimik. All right. So, April, it seems that we have an optimistic set of customers. And I remember also we took this survey dun sa premium customers natin, and so far we had the same result, right? However, we also saw the market correct from its August high. So if we're all feeling better, why is the market currently not so strong? Where's the disconnect here, April?
Okay, so we'll talk about the 2017
Yes.
outlook. And well, Actually, no, it's not surprising why the market corrected towards the second half of
Yes.
the year. Kasi actually 2016 was a very good year, di ba? We had a GDP growth of 6.8%. And for 2017, this is according to consensus forecast, GDP growth is expected to slow down. Kasi last year was an election year, and typically during election year, the GDP growth is very strong.
Malaki ang gastos pag-eleksyon. No?
Talaga.
Okay.
Pag, syempre high base ka na, wala na.
Right.
And then, I think some things I'd like to point out is for this year, pag tinignan nyo yung exchange rate, the peso is expected to weaken. And this is partly due to the current account to GDP. You will see, no, 2016 ang estimate 1.3. Tapos, this year, bababa siya to 1.1%. So, current account just measures the amount of dollars that come in versus the amount of dollars that go out. And unfortunately, since marami tayong mga Pilipinong yumayaman, bili rin ng imported products. Diba? So, diba, lahat ng tao dito, bili ng Uniqlo, for example.
Oo nga. Sino sa inyo ang
H&M, diba?
bumibili pa sa bench? Wala na.
So,
Uniqlo na kayo lahat. Ano?
unfortunately, but aside from that, of course, pati naman yung mga machinery sa investments imported din. So because of that, our current account to GDP is actually shrinking. So if you have a weaker peso that is brought about by a shrinking current account, our foreign investors don't like that. Kasi, syempre pag nag-weaken yung peso, let's say your market was actually up by 10%, but the peso weakened by 5%, magiging 5% na lang ang gain nila. So that's a major turn-off for foreign investors. Inflation rate din natin from 1.8 this year expected to pick up by 2.9 as commodity prices are going up and US dollar is weakening. So nagiging mahal yung mga, say, gasoline prices, for example, food prices. And ang interest rates, again, is going up and for this year expected to be higher. So maraming challenges, so to speak, for this year, which is not surprising, causing the market. And then, let's go naman to the specifics. So if you look at the specifics, there are a lot of short-term policies that will be painful. The excise taxes on oil, di ba? Malaki yung impact niyan sa oil prices. So it could negatively affect our oil companies and potentially airline companies if plane fares become more expensive. That could mean less travel, at least in the short term. The government has also said that it will increase sin taxes on tobacco and alcoholic products. And then sa automobile excise taxes, potentially magiging mahal na yung mga sasakyan. So I think for those who are planning to buy a Land Cruiser, I think right now it's 4.5 million ba, something like that. It's going to be, after everything said and done, it's going to be closer to 9 million.
Nako.
So, yeah, pwede ka na bumili ng mamili ka bahay or Land Cruiser, diba? So, yun na siya. And then, sugar taxes. So, yeah, the C2 daw, the price of your C2 will be more expensive by potentially 40% more expensive. So, syempre nakakatakot yan. Then, end of contractualization. So, companies that hire contractual workers will now be forced to hire them as permanent workers, and this could lead to some increase in cost. And then some potentially weaker ties with the US because of the Philippines' independent foreign policy and diba, decongestion in Manila, so removal of incentives for IT BPM firms in Manila, that could actually lead to slowdown in the growth of the BPO sector and hurt our property companies na nagpapaupa dito sa mga BPO companies. And of course, a little bit of impact on exports and tourism as well. With the less closer ties with the US, because the US accounts for a sizable portion of our tourist and export market. So may konting impact. Potentially, we don't know yet. And then, let's go to the next slide. Another problem kasi is for this year, our EPS growth is projected to be only 6.9% for the PSEI. And of course, similar to the US, you will see that we are trading again at the upper end of the PE band. So mahirap nga mag-justify na ng mahal na valuation when your earnings growth is quite slow on the PSEI. And finally, again, di ba kanina, we had mentioned that the foreigners are very particular about the current account and the peso. So you see that the foreigners are actually selling the market. And with that in mind, baka hindi pa sila bumalik agad. So if you will see that the impact of foreign selling, foreign fund flows is quite substantial in the Philippines because they account for around 50% of volumes. Ayun.
Good news naman. Yeah.
Sa good news naman tayo.
Parang,
So that said, we should actually view the challenges for 2017 as our opportunity to accumulate stocks. So our fair value estimate for the PSEI is around 7,500. Okay? So if the market goes below what we believe is the fair value, habang nagko-correct siya, dapat mag-accumulate tayo, lumakas ang loob natin. Below 7.5, let's do a peso cost averaging. But in case it goes back to the 6,600 level, which it did last year, we should be buying aggressively. That's something that I think we should remember. Okay, and I will discuss why we are very excited. So I think as a background lang, I'd like to share with you the vision of Duterte for the Philippines by 2040. So one of the things that he would like to happen is for our GDP growth to continue at 7% per annum until 2040. Okay, and he plans to do it through higher infrastructure spending and more FDIs. Okay, and by doing so, he wants the growth of the Philippines to be more inclusive. Okay, so reduce poverty incidence from, I think, 22% to 17% by 2022. And by 2022, he wants the Philippines to be high middle income, or he wants the GDP per capita to be at the $4,000 range na.
parang Thailand.
Parang
ganun.
Thailand na tayo. Thailand and China. And then by 2040, high income status na. So $12,000 per capita. Okay, so what does he plan to do? He wants the country to be more competitive. He wants even the people to be competitive. Okay, so he'll spend on infrastructure, spend on education, healthcare, social protection. Okay, so you'll see na ang laki ng planned increase from 1.7 trillion to 3.9 trillion by 2022. For them to do this increase in spending to make the country more competitive in, say, attracting investments and making people more productive and competitive, we need to see the passage of the train or the tax reform for acceleration and inclusion. Okay, yan yung train. So what is train? Yan yung mga, yes, tax packages na, may mga giving back. Pero again, may collection din. So in short, the government wants to raise 400 billion by implementing different tax reform packages. So right now, yung number one pa lang yung personal income tax. Yan yung mga higher excise tax, higher VAT on certain goods, no? Tatanggalin yung mga exemptions. And of course, lower tax rates for individuals. So I have another slide. So ito na lang, like, sa dami-dami niyan, what does it mean for us anyway? Kung tinanong mo sa akin, ano ba yung pinaka-relevant sa akin bilang investor at, of course, part of the working population? Okay, so for 93% of the Filipinos who pay taxes, who actually earn 31,000 pesos or less, they will get around 20% increase in disposable income because they don't have to pay taxes anymore or significantly less taxes. So malaking bagay yon. That's around 5 million people who will benefit from higher, parang nagka-pay increase yung 5 million people. And then infra spending target for next year up by 46%. So a 46% increase in government infra will have a significant impact on GDP growth because in 2016, that's one of the reasons kung bakit ang lakas ng GDP growth ng first half because the government really increased spending. It was up by mga 50% first half of last year. And then of course, GDP growth after a slow 2017, ang 2018, they expect GDP growth to be 7 to 8% na. And lastly, yung budget deficit, 3%. Teka, masyadong advanced itong slides natin. Teka. 3% deficit to GDP. Like, this one might not be relevant for you, but it's very important for me as an analyst. Kasi, and especially for foreign investors, they look at this. Kasi sa totoo lang, pwede ka namang gumastos na umuutang eh. But the problem is, if you borrow money to spend, your deficit to GDP will go up or dumadami. And then we'll go back to our problems in the 1990s, 1980s, where our interest rates kept on going up, the peso kept on depreciating. We will lose our investment grade ratings. But because of all of this, mag-grow yung economy natin and potentially we could enjoy a ratings upgrade, which is a very important development. And so for 2018, I think, well, nawala na siya. Anyway, the GDP growth will be much faster. And of course, with the faster GDP growth, I think the market will perform very well.
So there you have it. There are short-term concerns on the increase in certain taxes, sa kotse, sa gasolina, sa coke, no? Right? But there are also tax policies that will give back to us, tax cuts. Right, 95% of 93% of the working class will have an extra 6,000 pesos as this
20%.
20% of their income given to them. Imagine. So I guess you just have to spend wisely then, right? So it all sounds good. It all sounds very good, especially the sentence, the year of accumulation. But it's all predicated, of course, by this plan. But what do you think is the biggest risk in all of this?
Okay, the biggest risk I feel is that the tax reform policy will actually not be passed. Kasi the scheduling of this is, it will be passed this year. And then next year, implemented na agad yan, January 2018. Implementation agad. Now, if we don't do this, if we don't get to pass the tax reform policy, what will happen is, of course, the government cannot give us a tax cut, and it cannot spend also on infrastructure. So, although status quo, wala kang higher GDP growth, even the stock market probably will just languish at current levels.
Right. So again, execution is key. Now, there. Okay. So before we move on to our technical outlook of the Philippines, we ask again another question to our audience. So kung naalala nyo, di ba? Please flash, based on your stock portfolio, how heavily invested are you in stocks today? And it seems that 62% of our customers are aligning with their expectations of their jobs, because 32% of our customers are over 75% invested in equity markets, and 30% are almost half to 75%. So I'd like to throw the question to Mr. Juanes there. So in a technical perspective, is it justified to be bullish or this bullish?
Well, the stat is telling me that the investor is bullish because they're taking a position. And as much as that, of course, sounds nice, I hope that you are on the lower end of that high band that you spoke about, because if many of you are already positions 80, 90% or over, then what that would tell me is I should be a bit more cautious because everybody has invested and you're just all waiting to sell. Right? So it would have been nice if we had a lower number to be able to justify that fact. However, we've looked at analysts' recommendations with regards to their index targets. Many of them are are still not exactly that optimistic, so to speak. So even on the bigger investor side, I think they're also probably even lower than the position that you've managed to be able to portray there. And so looking into the index graph that you see here, you see recently we've had a very sharp run-up since the new year. We had the index climb up from 6,500 to about 7,400. And we seem to be running into problems right now because we hit a wall of resistance. And what's going to happen here is that prices need to be able to move up and down in a tighter band because people are kind of waiting to see what happens, whether, like she says, whether execution of all these policies are going to turn out. And we will expect more winding nature for markets for the meantime. However, looking into it, I think I feel quite optimistic that although we're at resistance, that the chances of going all the way back down or even lower are actually on the lower band of my expectation. And I'll just give you an idea of what I mean by that. All right. So the graph on top on the left side shows you the longer term picture of our PSEI index. You're looking at the trend move since 2009 up to today. And we are plotted now on what we call the Elliott wave swing towards the latter portion of the corrective phase. Normally, when markets go into a heavy corrective movements, they usually have three big corrective swings, which we call an A, B, and C wave. So that means the closer you are to the C wave, the closer you are to this all ending. And so we are now in that C wave, and not only are we in that C wave, we're coming towards the tail end of the C wave. So that means I think a lot of the negative movements have been priced in already. There might be a little bit more, but if there's going to be a little bit more, you should look at that as an opportunity rather than something to get scared about. Because remember, you're coming towards the tail end of this, and I don't think you want to be waiting for prices to shoot up before you start buying, right? So this should be a gradual process as you come to it. The graph on the right side will show you the potential swing conditions of the current movements. Let me just see if I can, okay. So the only thing we're really trying to be able to pin down to a more accurate stand is whether we are in wave 4 of the C wave or whether we are in wave 5 of the C wave, like, okay, like this. And so if we are in this situation, that kind of makes things a bit more bullish because it tells you the worst is over. But usually after a major corrective movement, there is a necessary period of accumulation, like April suggested, that we have to go through. So yes, there will still be some signed widening movements inside, but at least I believe you will see a wide band of which traders there in the crowd will probably be able to take advantage of. So you have to be ready for this wide swings and try to be able to take advantages, especially if they come down towards support. Now, you might ask, why do I say that perhaps the 6.5 zone or somewhere close to it may hold already? Well, there is some evidence, at least from what I've studied so far, that the market's general trends remain bullish. If you look at all the sub-indices you see in front of you, you will see majority of them are still pointing upwards in terms of the trend. Some of them have corrected quite a bit already towards the lower end of it, although, of course, yes, the New Year rally put it a little bit further from major support. But it still tells me that we've kind of seen the lower end of that particular market based on that. Also, if you were to look at the different industry sectors, you will see the conglomerates and the property still upward trending, despite, of course, there may be some weakness in the property end, I think, as April pointed out. And if you look at the commercials and industrials, also moving sideways, I hope they should be coming closer to the lower end of that band soon. And of course, you can see the financials. They look quite bullish to me. That looks like a big ascending triangle, and that's a very bullish pattern. We're just waiting for time to finish. And in the lower ones, the weaker two would be mining and services. The mining industry, however, has broken over its downtrend line. That's supposed to be bullish. But I think you, as well as I, know that it has very intrinsic weakness because we've got a very tough policy system taking place into the mining sector right now. So I don't think this is just going to shoot up. This is going to take some winding before it finishes off, because especially after what happened to many of those mining companies we just saw in the last couple of days. And of course, services, I think with what I see there in the picture, I've seen quite a number of indications telling me that this particular sector is bottoming out. And so with that, I really cannot say too much bearish items here. It's just looking for the right timing moment to be able to facilitate buying your positions. Also, I also wanted to be able to point out another reason why I also feel quite optimistic is, first, I've seen quite a number of issues actually hit their 52-week highs. Normally, when this happens, that means that the market is starting to show some sense of optimism. Because if they're willing to buy stocks all the way up to the higher bands of the ranges, then you must be looking for something even longer down the road to push their stock higher. So, yes, I know there might be some restraint into that ability to climb, but it still tells you that there's initiative to move the money back in there, and that's the reason why many of these companies are climbing. Second, there are also quite a number of companies that are bottoming out from major patterns. So that tells you that if that bottoms out and the other ones continue to make fresh highs, then you're really looking at the potential for the market to have that recovery despite it being in a very wide range. And so I guess you might ask, all right, so what are we looking for as an opportunity here? Well, the opportunity is if the market can dip just a little bit more, or even if you go through what seems to be a scare scenario, which is for it to go all the way back down to where it's come from, it doesn't matter to me. Both are going to present a very nice opportunity for you to buy. In fact, the weaker scenario, the one in the lower, actually gives you even a better situation to buy because you'll be closer to major support and your upsides will be much more significant. And so I think we're just coming around to be able to go to this wind-up phase and accumulation phase. And after this, I think everything should gradually see it back into the right upward trend. All right. So just to be able to look at the, just to be able to put in the little positives of everything in there, sectoral sub-indices showing you that there are already movements trying to tell you that things are getting stronger because the trends starting to show relatively good movements. We've seen issues climbing to near 52-week highs, which is a very positive technical orientation. We have seen clear basing patterns from major companies as well, as many of these are index stocks. The PSEI itself, so far at 6,500, has showed a higher low. That alone, in my language, is also a bullish point. And of course, even if the market does go back to 6.5, or maybe even little lower than that, don't think it's going to fall much lower than that with all the other technical advantages that you've seen. So all in all, this paints pretty much a rosy picture, at least for the traders, because you're going to get your opportunity to make a good size money, even in a sideways market.
Right, and I read in there, in your slide also there, what more do you want, right?
What more do you want?
So for those of you guys who are waiting for an opportunity to actually accumulate in 2017, is it correct to just buy when it dips, Juanes?
I feel so. But of course, don't just buy any company out there. I think
Correct.
April will give you a guide on how to zone in the right issues. Later, we can also talk about a little bit of the issues that look better rather than just picking anything that moves.
That's correct. We'll get to that later. So in case you guys are not aware, COL Financial also offers 90% of the mutual fund industry in terms of industry AUM in the country's first and largest fund supermarket. And of course, managed by one of our panelists here. Now, going back to the question on allocation, Marvin, is there a difference between our customers' allocation and that of our fund managers?
Thank you, Ed, for asking. Okay, good afternoon to all. Well, the survey said that you're invested about 50 to 75%, more or less. Medyo that's a good sign, no? The slide I'm showing you here is the investment exposure of fund managers in their equity funds. The blue line represents their exposure in the equity funds that they're managing. Just for your information, if you are a fund manager of an equity fund, the primary purpose of that fund is to invest in equities, of course, and to outperform the market. And having managed funds before, for an equity fund to be kind of a neutral position, you have to be about 90% exposed. Yung white line there, that's based on experience, no? That's a neutral position, about 90%. Kasi the purpose of that fund is to invest in equities. It cannot be too low in equities. So if it's above 90%, like the start of January 2015, it's about 93% exposed. This is the average, no? The average exposure of fund managers. It says that they're very bullish about the market. That's why they want to invest as much as possible. Now, towards, as you can see, towards this yellow line, the election, uncertainties increased. And you know, if you're a fund manager and there's uncertainty in the market, the risks increase. They are generally prudent. As you can see, they're kind of selling down their exposure to a low of about 82% right before the election. Because, you know, right before the election, there's a lot of uncertainty. You don't know what's going to happen, diba? Who's going to win, what the winner will do in terms of the policies, what are the changes that's going to happen. That is, fund managers allergic yan sa mga ganyan eh. So they reduce their exposure to about, the low of 82%, no? As of April 2016. And right after that, there's a little bit of 10-point agenda by the administration, and then there were some cabinet appointees. The market or the fund managers basically became a bit more sublime, meaning mukhang okay na, but still below the neutral position to about 86%. Kasi there's this risk naman of this Trump administration. So parang meron pa ring risk dyan. So they're still low. And what's peculiar or what's interesting about this graph is that that green line that you see there is the stock market. As you know, the institutional investors, the fund managers, they more or less, they're the majority of this market. Where they go, the market goes. So if they're unloading, you can see that there's a kind of a correlation. Because billions of funds yan ang hinahawakan yan eh. So when they sell, the market really is affected. But one thing is interesting about this. As of late, I was talking to them. I do due diligence, interview with all these fund managers to report to you. Doon sa aming website, it's there. No? We make a report of these funds. They're only about 86 to 87% exposed. What does that tell you? Ibig sabihin, may bala pa yan. Nagiintay na lang yan ng bagsak. When the market goes down, sasaluhin yan. Because they cannot keep, when the market is down, they cannot keep it in cash. Eh. Because it's supposed to be invested in equities. Kasi pag umakit ang market, naiwan sila, their fund will underperform. May iwan sila. What are you doing? Diba? You're supposed to be invested in equities. You have to be invested there now. So yung 86% na yan ang ano nyo, yan ang, for the market, for the retail investors more particularly, sasaluhin yan. Billions of funds, nag-iintay lang yan. So sinasabi ni April and si Juan is about the year of accumulation. These guys are accumulating. You just don't see them very much because medyo there's a lot of uncertainties in the market now. Eh. What Trump's going to do, what's going to happen to the BPO, there's going to be an immigration lockdown, medyo mga ganon. So it's very hard to determine what's going to happen. So they increase their exposure but not as much to the level. Kabahan kayo pag nasa 95% yan. Meaning they're fully invested. Well, pag bumagsak ang market, walang sasalo. Kasi they're fully invested. Eh. So, this chart tells you that may downside protection ka. So that's what the fund manager do. That's different from the 50 to 75% from you. Kasi naman yan eh, ang retail investors, you can really come in and out anytime. Ang fund managers, they're billions of funds yan eh. They cannot easily move eh. So yan ang maganda dyan.
Right. Thank you, Marvin. So before we move on further into the discussion of managed funds, we again asked our customers in a survey, which type of fund do you think performed the best in the past 5 years? So 50% of you answered equity fund, okay? And only 21% actually answered equity index fund. So Marvin, is this the correct answer ba? Tama ba? Are they correct? 50%. Sayang may GC daw.
Interesting, ano? Mali. Mali. Because I think they think the equity funds really outperform. But you know, nag-iiba na yung mundo eh.
Wait.
Things are
Mar-
changing, no?
Marvin, wait. An equity fund is actively managed, right?
Yes,
So in
yes.
theory, tama naman sila eh. Right? But in actuality, ba't ganun?
Yeah, yun nga eh. You know, this is the actual data for the past 5 years now. Compounded annual growth rate of these equity funds performance. As you can see, but this is only an average. An average. The bond funds and the balance funds perform less because they have fixed income investment. Fixed income investments have lower returns, but lower risk. That's understandable. Pero yung equity fund, yung equity dyan nakalagay, these are managed funds where it relies on the skill of the fund manager in buying and selling and choosing the stocks. Yung equity index dyan, that is just mirroring the Philippine Stock Exchange Index exposures. Yung 30 stocks na nasa index, ginagaya lang yan. So there's no judgment being done by fund managers. And it appears that for the past 3 years and the past 5 years, mukhang nag-outperform pa ang index kaysa sa actively managed funds. Simply because, you know, when the purpose of an active manager, fund manager, is really to outperform the index kasi you're paying them fees eh. And the problem is, in the process of trying to outperform, they do certain strategies. They time the market, diba? They wait for opportunities, and they do strategies like stock picking, small caps, big cap, value, and growth. So may mga strategies na ginagawa yan. And some of them really do well. Some of them. But most medyo nagkakamali. That's why on average, medyo mahina yan. And that's, the next slide, that's very interesting eh. In the US, it also happens. In the world, particularly in the US, majority of the actively managed funds underperform. In fact, the data that you have there, for the past 5 years, only 14.4% outperform. That means majority of them really are doing, diba? On average, medyo mahina. So, what I'm saying is that napapalitan na yung, things are changing now. The world of investor, or the world of investments is already changing. And sa US more particularly, no? Like for example, kaya anong nangyayari ngayon, the next slide will show that the flow of funds are now moving to these passively managed funds, like the index funds, the ETFs. In the US, no? You can see there the black bars for the past 10 years have been experiencing inflows. These passively managed funds, meaning yung index funds, ETFs, yung walang masyadong strategy. The yellow bars are the actively managed funds. So they're experiencing outflows for the past 10 years in the US. They have already changed the way they invest in the US. If you put that together, about $850 billion went into passive funds, the black one. And then about more than $980 billion went out, net outflow dito sa actively managed funds. So that's what's happening in the US. And I think that's Ed, no? This is a trend that's happening. And we are actually going to see that. And we're slowly seeing that. In the next slide that I have there, sa Philippines, only about 11% of the actively managed funds outperform. This includes mutual funds and UITFs, yung managed by banks. Put them all together, only 11% of them outperform for the past 5 years. That's about 2 funds lang. 2 funds over about 18 funds. Yung isa pa nga dun, yung minamanage ko dati. Yeah. And so, nice. Konti lang talaga yon. And that is already tells you na, teka muna, bakit nagbabayad tayong fees nito, niligay mo ito sa actively managed funds. So, anong nangyari, the next slide will show, actually, for the 2016, for the first time, we saw there are more funds now moving to the index funds. Yung color blue niyan is the flow of funds, and the red now is the outflow. So the inflow went to the index funds, the outflow came from the actively managed funds. So much so that on the next slide, you see that the total assets under management o yung lahat ng funds na minamanage ng fund managers in equities went down from 169 billion in 2015 to 155 billion in 2016. About 8.3%. Bumaba yung fund level nila. However, on the next slide, the index funds experienced a growth of 15.7%, from 44 billion to 51 billion. So slowly, the behavior is also changing. So parang umiiba na sila. That is why more and more, the index funds is getting more popular. And I think it's the more efficient way to participate now in the market. And considering the fact that the Philippines is only about 1.4% of this Asia ex-Japan index. If you imagine, no, if you have a portfolio, a foreign fund manager, and only 1.4% of your portfolio is in the Philippines, you don't really look so much on the valuation. You're only concerned with the flows. Kunyari, may pumasok sa fund mo, bibili ka na yan proportionately. Pag may nag-withdraw naman, you sell. So that's why our market is very volatile. We are very much affected by these flows. We're very small relative to the world. And considering the fact that 50% of our investors are foreign, so pag gumalaw yung funds ng foreign, galaw din yung market natin. In the next slide, you'll see that the flows, the red line, which is the net flows of foreign, more or less, and the blue line is the market, the stock market index, medyo more or less correlated. Pag pumapasok yung foreign funds, umakit ang market. Pag mabagsak naman ang flows ng foreign fund, bumabagsak ang market. So it's critical to understand how these flows move. Pero ang hirap niyan, ang hirap basahin yan. It's hard. If you're a fund manager, your training is really to understand fundamentals, technicals, and some strategies like value, ganyan. Paano mo lalagyan ng value in flows, di ba? Hindi mo naman nakikita yung funds niyan eh. It's very hard to anticipate that. So, minsan, ang active managers medyo, they read that differently. So, that's why you saw the performance.
Now, okay, so now we understand that index funds are a good option for everyone to take, right, Marvin?
Yeah.
But the COL fund source has 26 funds, right? And 4 of which are index funds. The next question is, how do we pick the right index fund?
How do we pick the right index fund? Ito na next. Ako naman. Sa akin pala lahat. Okay. Okay, choosing the right mutual funds naman. I guess when you choose a fund, Ed, you just have to act. Sa'yo ko ito nakuha eh. You just have to act. Diba? Ano ibig sabihin na act?
Okay.
Asset size, cost, and track record. Para madali lang maalala ng mga tao. How do you choose a fund? You just have to act. Ano ibig sabihin na act? Asset size, cost, and track record. O isa-isahin natin yan. Asset size means how big the fund is. Basically, magkano yung AUM niya, yung assets under management. It tells you about brand equity and reputation. Pag mas maraming taong bumibili niyan, mas reputable, people believe in that fund. So, and it's also more efficient kasi malaki na eh. Malaki na yung fund eh. So pag may pumapasok na inflow o may labas na outflow, hindi masyado nawiwindang yung fund. So it can really do that. And the investment approach is more conservative. So kasi nga, the fund is so large, that's why it has to move very conservatively. Okay, that's A. The next slide is C.
Cost.
Cost, no? That's very critical to consider when you're getting a fund. The fees kasi is a drag. It's a drag to performance. So much so that the higher the fees, the higher the drag will be. And in a study that we did for the past 10 years, hypothetical reduction of the past 10 years in terms of the cost, pag lumalaki yung cost, mas bumababa yung outperformance to the extent of about 58% of your return. Kunyari, if you make about 10%, about 58% of that, kinakain ng fees.
Oh.
Over a long period of time, no?
Wow.
That is why it's critical when you choose a fund, yung mas mababa ang fees. And then the track record, of course. The track record is really the performance, yung return. Tutingnan natin yung 1 year, 3 year, 5 years, and since inception. And also the consistency of the returns. Basically, whether it's getting the same or more or less, not too volatile, not too risky. So, moving to the next slide, quickly. Yeah, moving to the next slide. So we have that in COL fund source. All the data that you need to make a decision on, nandoon na sa website natin yan under the Mutual Fund Research tab. Maliit lang to, but let me try to enlarge that. Meron akong enlarge. Yan. So yung fund performance, standard deviation, expense ratio, and fund size. This is basically the information that you will see in our site. Andyan na lahat yung funds. Diba? So andun yung ACT mo. Asset size is the fund size. Yung C is cost, which is expense ratio, and T is the track record. So nandyan na yan. You can just choose from the three. So the best one is you get is the one's the largest, and the cost is low, and the track record is very good. And now, what may shoes dyan? Pag ano pala yan, I run kasi, I run. So, when you choose a fund, parang just buying rubber shoes or running shoes. Act din ang gagamitin mo dyan.
Ganun ba?
Oh, yeah. Diba? Okay. Asset size is your brand. Kunyari, Nike, Adidas. Ito, ano yan Asics. Yung cost, which is the price of the shoe, track record is durability, comfort, etc. So parang choosing a pair of shoes lang yan when you're choosing a fund. So life is already difficult or complicated. We just try to simplify it as much as possible. So when you're choosing a fund, just use these 3 simple rules that we try to make it available to you. And it's available in the site. And you can check it out anytime you want. Just remember this, the size, the cost, and the track record. And then you can have a winner in your portfolio.
Thank you very much, Marvin. So now that we understand both the fundamental technical outlook and also some views on the status of funds, let's now move on to the more important part of this afternoon, which is the discussion of our experts' picks. But before we get into that, we again asked a question from our audience. What do you think is the most important theme in picking stocks that will outperform in 2017? And 31% of you guys answered growth in earnings. 25% answered industry or sector, while 20% of our audience and also our respondents answered blue chips. So I throw the question to April. What is the most significant change you've seen in the world over the past 10 years? In stock selection, I mean.
Okay, sige. Sa stock selection, no? So, the past 10 years, when we started out, 10 years ago, madali pang mamili ng stocks. So, nung dati, parang tinuturuan lang tayo sa school, di ba? Top-down approach. Look for a good industry. And then pick the company which will give you the fastest earnings growth and that one that is trading at cheap valuations. Lahat naman, di ba, yan ang gusto. Pero unfortunately, that was 10 years ago, but now, that's hard to find. Because with more investors investing in the stock market, with the bigger sizes of the funds, usually, when you have a good company that belongs to a good industry, na magandang earnings growth at mura, binibili. Kaya wala na sila. So the market is becoming more efficient already. So that said, for us, we actually devise a different way of picking stocks. We also do the top-down, but at the same time, may bottom-up din kami. We try to analyze the situation and try to identify whether there are some things that are different. May nagbago ba? At meron ba kaming alam na hindi alam? Do we know something that people don't? I guess the most important question that needs to be answered is, what's priced in? And do we really know something that the market doesn't? So those are questions we try to ask ourselves, and even our analysts, they try to determine that. And then, most importantly, actually, we try to see if there is a catalyst in the near term. Meaning, will profits be growing such that parang mababago ba natin ang pag-iisip ng mga fund managers at other investors such that they will buy the stock that we want? So those are questions that we try to answer nowadays when we try to pick stocks. Okay, and well, anyway, so before we share our stock picks, we just like to share the performance of our Calling the Shot stock pick. So this is a product that research came out 5 years ago in 2012. And I'm happy to say na, yun nga, people have asked us, why don't you just create an index to see whether or not nag-outperform ba yung mga recommendations ninyo? And we're happy to announce that we actually have outperformed the market quite a bit. So the past 5 years, our compounded annual return is 23% versus the index, which is around 9%. And if you had just followed our recommendations in an equal weighted portfolio, you would have generated a return of 178% the past 5 years versus the market, mga 51, 52%. Okay. And while I was reviewing this slide, I just like to point out the year 2012. If you look at it, the return of our portfolio was 62%. Even the market is 33%. The reason, again, why I'm excited about 2018 is because 2018 is the 2012. That is the second year of the Aquino administration.
Right.
Alalahanin nyo ng 2011, yung market natin hindi rin masyadong gumalaw, nagsa-sideways. And then people were saying, PPP is PowerPoint pa lang. Wala namang PPP di ba? Walang PPP project. So in the same respect, 2017 is 2011. Tapos 2012, di ba, first PPP project was launched. Tapos the market went up strongly. So 2018 is going to be 2012. That is our prognosis for the market. So yun. Next slide, please. So just to share to you, di ba kanina we were talking about how we ask ourselves, do we really know something that other people don't? One of our winning stocks was DNL. We recommended the stock at 349. It just had an IPO. And this is a stock, kasi the reason why I know about DNL is because I was an analyst mga year 2000 thereabouts, early 2000s, and the same principals own Chemres. And of course, I know the family. I know that they're very knowledgeable. And they were explaining the business. So we met with them right away when they did an IPO. The fund managers at that time said that this is just a commodity stock, therefore we don't want to buy it. We don't want to pay 20 times PE for a commodity play because they had a lot of business in parang cooking oil, yung mga ganon. So ayaw nila. But then, we really understood the business better. We understood that they were trying to move away from that commodity business into the higher margin products, which made the business more resilient and profits would grow by teens. And the beautiful part about it, that this stock at that time was trading below 20 billion market cap, meaning a lot of the foreign funds didn't even look at this. So we felt that there was a great opportunity, therefore we recommended this stock. And that was what allowed us to make a lot of money because we spotted it early and we understood the business before a lot of the fund managers did. Happy to announce that COL has 8 to 9 analysts covering the market, whereas the foreign brokers would normally have 2 to 3 analysts only. So they would not have an advantage in analyzing these stocks. Usually these stocks would have to be quite big already before those other brokers would be able to cover them. Okay, and another stock that performed very well for us was CNPF, or Century Tuna. Okay, last year they announced the acquisition of the coconut business, which was owned by the private group, the principals. They own the manufacturers of Vita Coco. And this is a fast-growing business, and it was bought at a good price by the listed company. Our advantage, again, because we have more analysts on the ground, we were able to analyze the impact already and come out with a good fair value assessment, whereas the others, medyo natagalan sila. Therefore, we were able to identify this as a winning stock at the time and allowed the investors to make a lot of money. Okay? So for this year, our bias is more on value. Okay, kanina tinatanong, 'di ba, gusto nyo growth. Okay, pero kami, ang sasabi namin, medyo kailangan discipline tayo this year. May value. Let's look for values because we believe the abundance of risk factors will make it difficult for stocks to justify expensive valuations. So in other words, let's not rush buying into darling stocks, fast-growing stocks at any price because there will be opportunities to buy them cheaper. No? Dami nating risk kaninang pinag-usapan tulad ng inflation and interest rates, our current account and the peso, tapos yung mga short-term policies na potentially could hurt the economy and the different sectors and slow profit growth and expensive valuation. So we have to be patient and look for values. That's our theme for this year. Okay, so our stock picks.
Okay, so I think I have to ask you a short question there, April. But sige, I'd like to have everyone to prepare their cameras first before we talk about the stock picks. So, what are stock picks, April? Camera lang. Guys, ito na yun. Prepare your camera.
Okay. So, sige, ano yung stock picks?
Stock
yun
picks na.
So, yung mga dati na naming stock picks, no, FGen and Metrobank. So these stocks have been sold off. And we just like to discuss why they were sold off and why we still like them. Baka sabihin nyo, baliw ba kayo? Binibentahan itong mga stocks na to, ba't nire-recommend nyo? So FGen, the reason why it's being sold off is because remember last year, coal prices were falling. And FGen is, it has a stake in EDC. Therefore, if you're a renewable energy company, you're at a disadvantage when coal prices are cheap. Kasi di ba, mas gusto natin gumamit ng renewable energy pag mahal yung oil or yung coal. But pag bumaba yung coal and oil, you don't want to use your renewable energy, di ba? And aside from that, last year, they came out with some new plants. Since mababa yung coal prices, it was difficult for them to actually get new contracts. But then now, coal prices are increasing because the global economy is improving. So at least that kind of improves the prospects. And the plans of FGen are already complete, making it easier for them to secure contracts. And of course, this stock is very cheap. Metrobank, the reason why it was sold off last year was because the net income was not very strong last year. And then people were a bit concerned because they increased their provisioning. Sabi nila, baka maraming non-performing loans. But again, we have our analysts look at this, and they said that the reason why the profits are weak is due to the absence of trading gains, and the net interest income grew slower because nag-switch lang sila from trading securities to lending, which is actually more important. You want to buy a bank because it's actually lending, not because it owns a lot of bonds. Okay? And then the provisions went up because in 2015, yung provisions nila bumaba. So 2016, they just normalized it. Okay? Ang mahalaga sa amin is at the current price, we feel like it's really cheap to the point now even the insiders are actually buying this stock. So you can't, if a company has problems, you won't see the insiders buying the stock. Okay, then the next slide, our next few stock picks. Okay, we have Mega World. We still like Mega World. We recognize that this stock has a lot of problems, or actually the industry has a lot of problems. No, residential take-up sales are weakening at this point, and there might be a possible oversupply in offices. given the given nga na everybody's expanding and baka nga there's a move to decentralized development outside Manila. But the thing is, even if we factored in all these negatives, like Mega World right now, I think is trading at 50% discount to its net asset value. Meaning if you add all the properties that they own and then you less it by 50%, yan ang makukuha mo at this point. And it's trading below 10 times PE. The way we see it, maybe these challenges that Mega World is facing at this point is only temporary. But over the long term, it's still very positive. The outlook for our economy is very good. The population is growing. So it's just temporary weakness. Over the long term, the opportunity is there. Another stock that we like is Robinson's Retail, RHI. Okay, a few years back, this stock was sold down because of concerns of intensifying competition. So, for example, yung mga mini-stop, 7-Eleven, di ba, tabi-tabi yan. So, medyo tinamaan sila sa margins. Even Pure Gold, di ba, and then SM Save More, nagtatabi-tabi sila. So, humihina yung benta. But if you look at the financials of RHI, the competition actually right now has become less intense because what the players have realized is there's no point in being so competitive. So what they're doing right now is they are locating outside of Manila where competition is less intense. And of course, we feel like the market has not yet fully reflected that at this stage. Other stocks that we like, MCP, casino stocks last year were battered because I think first of all, a few years back, there was a lot of excitement towards this casino stocks kasi wala pa yung mga casino, so people were making very lofty projections. Unfortunately, when the casinos opened, hindi nagmaterialize agad, so binentahan sila. Nasabayan pa ng clampdown in China over corrupt officials. So even the gaming revenues out of Macau were quite weak. So the sentiment for gaming companies were really battered last year. But the past 2 quarters, MCP and the other gaming companies were actually delivering better than expected numbers. And another thing why we're excited about it is because we looked at the consensus forecast, and the consensus forecast we believe is too conservative at this stage. So there's a good chance that the casino stocks will outperform or beat the expectations of analysts. And of course, we know that Duterte has this pivot to China move. It could actually lead to positive surprise for stocks like MCP. Diba? And meron ngang infrastructure development going there, the NAIA Road, diba? Yung bago. That would also benefit them. And then another stock we like is Semirara. Well, quite fortunately, they're not part of the list of mines that were suspended. No? So that's a good news. But in some ways, it was sold down historically or the past year because of concerns that it would be. And it was also hurt by falling coal prices. But right now, again, coal prices are recovering. And then, hindi nga siya na-suspend. Okay? And may insider buying din siya, tulad ng Metrobank. And I think I have one more stock here, Meralco. Meralco is another stock that we like. So this stock was sold down when people were worried that it would not be allowed to do, it would not be allowed to participate in the retail electricity spot market. And another thing was its weighting in the FTSE index was reduced. So fund managers had no choice but to sell it down. Parang binanggit ni Marvin, pagka tinanggal sa index, di bebentahin, hindi na pinag-iisipan. So that created the opportunity for us, or for us to buy this stock. So first of all, the RES, what they will do is they were allowed to create a subsidiary to participate in the retail electricity spot market. And the rebalancing is over. The stock is also quite cheap. You have insiders buying the stock. For those who, let's say, like to buy high dividend yielding stocks like PLDT and Globe, I think Meralco is a better alternative because mas defensive yung business niya. Kasi Globe and PLDT are actually encountering more risk at this stage. Potentially, you can get a 5% cash dividend from Meralco, up to 9% if they continue to give the special cash dividends. So, may summary ako para isang slide nandiyan na lahat. Oh, pwede niyo nang picturean niya.
Picturean niyo na.
Para isang picture na lang, di ba?
Isang picture lang. I noticed, April, you also have a buy below there. No? For those of you who are attending this for the first time, what is the buy below price?
Okay, so for us kasi, we want to give investors a certain margin of safety when you buy the stocks. Kasi di ba nga, kailangan mura nyo rin mabibili. Para when the stock appreciates, you will get a better capital appreciation potential. Especially right now, we're talking about buying value. So the one thing that you could do is actually enter a good till canceled order in the buy below price. Para hindi nyo na kailangan bantayan. In case na binentahan yung stock, hindi kayo nakatingin, makakabili kayo.
Oh, okay. All right. So thank you very much, April. Now let's move on to our technical picks. But before that, we again asked the question to our attendees. Given the ongoing run-up, which set of stocks do you favor? A, the leaders, those that have already started to rally, or B, the laggards, those who have yet to rally? So based on your responses, 58.7% answered the leaders. So one is, it seems like we're talking to traders here, no? So do you think this is a sound strategy at this point to pick the leaders in the pack?
I think being a trader, it's very timely to be able to look for issues that have the ability to move quicker rather than waiting a very, very long time for it to move. And so, yes, the tendency for us traders is to really zone in on what the leading stocks are first. And maybe not perhaps to be able to chase the stock upwards, but if you can find leaders into the market, it is usually the good sense to be able to wait for them to do a little bit of a correction and to be able to pick them up once you see that particular corrective movement. So yes, I am in the camp of watching those leaders first. And if the picks that you have are not that many, and then we kind of go down the line to see how much we can find in the lower caliber range of stocks. Just to be able to give you a sense of how we technicians attempt to be able to rifle off a very big list of stocks right away, we kind of categorize the movements of stocks into three particular types of conditions, what we like to call the 3 R's. We call the retracements, we have the resets, and we have reversals. Okay, so to us, these are the three categories of technical conditions that we try to analyze stocks are. Now, retracements, the first one you see on your left side, these are very visible uptrends that are already taking place. Now, the problem is that sometimes they shoot up a bit too quickly, and because of that, they have to make these corrective movements because, of course, profit taking will come in every once in a while. So what we do is we try to be able to facilitate ourselves a program that we will follow so that it becomes next to a no-brainer. And we try to be able to say what stage of this movement is in a retracement is the stock at. If it's too much on the upper boundary of it, then we just wait. When it starts coming back down to a certain degree, will become comfortable, then we look for that as our entry condition. So for example, in the particular first picture you see there on retracement, we use 3 different types of moving averages to give us that sense of that condition. We use a 50-day exponential moving average, a 200-day, and a 400-day. Now, once you have these moving averages set up, and you can set up your graphs to be able to have all 3 of them all together, if you see a very strong upward moving trend, start correcting closer to the 50-day EMA, or exponential moving average, then that should be what you're waiting for as a worthy correction. And if you see if it bounces at or near that zone, then that could be your potential entry segment. Now, in the second, sometimes corrections can come in a little bit at a wider stand, and this is when a reset moment comes in. We call it a reset because what happens is that the stock has been fueling itself very strongly, and it really blows itself out because prices have just been too forceful. Then a major profit-taking campaign begins. And because of that, you will see prices either slide down very fast or they will cascade down gradually over time. And you will see that the price of your stock will fall back down somewhere in between the 200-day and the 400-day EMA. If you see the sample you have there in your graph, you will see a very sharp drop, and all of a sudden it bases out at the 2 to 400-day moving average, and then it starts to be able to pick up from there. Now, you will also know the last variety, which is what we call a reversal. We call it a reversal because what it has to do is it has to reverse a downtrend. So that's why we call it a reversal. It's reversing a downtrend. Unfortunately, that type of pick takes time to recover because you're coming from a very bearish condition and you're gradually putting money back little by little as that value is shown to you. But remember, it takes time to unwind that sense of being bearish because maybe the fundamentals are not that good yet. But a lot of people, let's say, for example, what April's doing right now, she's encouraging to look for value. So I'm sure if you see stocks like this, you're going to see them gradually turn around because she's already suggesting to you, these already look nice. They may not shoot up like a rocket ship tomorrow, but you're getting in at a very good price. It's just a matter of time before these guys attempt to work up. So now, when we pick, the tendency for us is to go with the first one first. Then, if there's not too much of that, then we look for resets. And if there's not too much of that, then that's when we attempt to be able to look for the reversals. Now, just to give you a sense of how we will do that, I took the liberty of categorizing just a number of stock picks for you. And this is how the technical conditions show you where they are. So obviously, the stronger ones are the retracements, then followed by the resets, and then, of course, the reversals. As you can see, there's much more reversals than there are retracements and resets. And that just kind of explained to you, because your index is moving sideways, there's still quite a number of issues that still have to bottom out or base out. And that's what you have there. If you also notice, the stock codes that are color green, these are all the stock picks of April. So if you can see, most of her stock picks are where? Okay, so they're in reversals. And the reason for which is simple, because she's already telling you that these companies have fallen down to valuable levels. Although she didn't say is whether they're already turning around to go up, but she's telling you this is the level that you start watching them already. Okay? Now the technician will come in and tell you which one of these guys will move up faster. Well, if you are a very short-term trader, then your tendency is to stick with retracements and resets first. If you're good to be able to buy this for the medium to long term, then you better start looking at those reversals already as early as today, because this is the time and opportunity you're going to get to buy that value. Maybe 6 months from today, it might not be valuable as the way they are today. So you might want to be able to zone in on them. So I managed to be able to do is I've looked at all the 3 different types of 3R segments. And just to be able to rifle off what's on the top of my mind in terms of the potentials for some of these more aggressive issues. So under retracements, we'll start with Bloomberry. I know April's pick was MCP, but like I said, we look for whether it's stronger, and Bloomberry has actually shown a very much stronger technical pattern rather than MCP, although MCP looks quite nice. And Bloomberry has just shot up very recently. It's gone to an overbought condition. And so this is one issue that we're waiting for prices to settle down a little bit more so that we can look for a better opportunity. And I think you can see there, major supports closer to 7 pesos. So the closer it gets to that price, the more optimistic I become for a potential entry for some of you. Next, we have DNL. I know April's had an issue on value over here. And it has been climbing for quite a substantial amount of time, but recently it broke out of a consolidation range, and it's also making a smaller pattern right now. The uptrend is very much still secure, so if you're asking me, I think I would be more in the camp to hold my current position or perhaps wait for it to dip before I actually buy more of this stock. But if you're looking to profit take, I think it should be very slight, and just wait for the opportunity for prices to come down if you want to add to that. Support is closer to about 12.14 to about 11.80 in that zone. Finally, we have Semirara. I've liked this stock actually a couple of weeks ago, but you know, it's really run up quite tremendously. I think their stock is still below fair, right? So stock is still below the fair value, so there might still be some upside here, but I'm already noticing some slowdown in momentum. And that would mean that I think after this run-up, it might need to correct a little bit wider. So I may have to yank down my supportive levels for you, although I know its current support is very close to where prices are at 132. But maybe a little lower, 127, maybe just a little bit lower than that might be a better area for you guys to be able to watch out for this. But I think after this picks up, you'll also have very powerful movements from these particular counters. In BDO. Now BDO is an example of a reset because this company has really shot up. If you notice the first half of that picture, you have a very, very aggressive move in BDO, but it's locked itself in a consolidation range. And 2 times now, it's pulled back closer to your larger moving average, and it seems to be picking up a base at that area. But recently, prices have gone back toward the upper boundary, and I'm watching it very carefully just in case prices manage to push above its resistance of 115.50. And if it manages to be able to do that, I think you'll be able to see 122, 127 in terms of a price move. So keep that very much in mind. Then Manila Water. Manila Water has been quite erratic. Well, I guess the reason is because they've had some fundamental issues in terms of policies, and I think the court decision, I think, that they were still trying to be able to work at. And you can see that the mileage in terms of prices were actually very, very big in terms of volatility. And being a trader, we love volatility because it's the way that we can make good amounts of money. So whenever you see the price attempt to come closer to the major moving averages, like you see it bouncing from there, that was pretty much a good area to be able to watch for potential entries as well. So I remain confident that if this manages to pull back closer to those moving averages, it should be able to work out a good opening for you. Next, we have MPI. Now, I think, yes, there will be a play on the infrastructure conditions, and especially if, as April said, if execution comes out to be quite clear for us that the government can do it. We're just waiting for the consolidation to end. Right now, it's pulling back from resistance, so if we can see a higher low make itself known here in the next swing, I think the next potential up move might be the move that may break the range out from that consolidation. So keep an eye on MPI. And for those of you who are value hunting for this, you have to wait for it to come back down just a little bit more. But it does look like a very nice pattern moving forward into the medium and long term. Now, an example of reversals. So first we'll start with Cebu Air. Now, this stock has really fallen down quite tremendously. Well, there's been mixed opinions. We've seen oil prices rise since I think early December. And because of that, I think it's very much impacting the potential upside of this, and people are playing very defensive into the airline. Although I've noticed a lot of airline companies in other countries are actually doing much better than this. So I'm not exactly sure if there's a very fundamental reason why it's keeping itself down there, but my signs are saying they've already pulled back below the major moving averages, and now they're trying to go through a period of accumulation. So it's time for us to watch over, because if this can push over a range of about 98 to 100, then you'll probably see it very quickly spike to 107 to 112 as a first potential target. So just keep this very much in mind. Next, we have Meralco. So I'm also in agreement with April in terms of the potential here. Although, yes, this managed to be able to fall down quite largely through those major moving averages. It's rallied recently, and it's now standing right below its downtrend line. And now, it's probably just going to wind up here because it's encountering some profit taking. But if it can manage to push above that particular trend line, then you'll probably see some movement that might be a little bit much more remunerating for you. Support is closer to about 262. I think targets could go back to 305 to 317 if we can punch through that particular range. And lastly, we have Robinson's Retail. I think the reversal here is very clear already. Unlike what you see in the first two, it's still trying to break resistance, whereas the last one has already done it. So it's a little bit more aggressive than the other two. But what I wanted to point out is, if you look at that last graph, look how much consolidation time it took before it actually went up. And you can see it was very testy. It would move up, down, and it could have proved to be very, very difficult to have bought a little bit too early. And that kind of pattern may actually happen in the other two picks that you see there. So remember, when you start buying reversals, you have to be prepared to be able to put your seatbelt on, because the ride can be a little bit choppy, and it might take a little bit time to be able to bear fruit. But please, when they bear fruit, the mileage is going to be big. And that's why, of course, buying value in cases like this, especially for the long-term investor, you really want to be able to keep track on these issues as they move forward.
Thank you very much, Juanes. So again, it's retracement, reversal, and
retracements, resets, and
resets and reversals. Sorry for that.
Okay. So just to be able to wrap up what we talked about in those things earlier on. Just overall, in terms of the technical conditions of the issues that we looked at, I think the overall conditions are still very good, particularly in US and Europe. Although, yes, they could use some corrections, but their uptrends will continue. The PSEI is still the process of trying to be able to work off a big consolidation. The potential for it to rally to about 7.7 or 8.1 is still there, but we still have to be able to break through that 7,400 zone. I mean, it's all a matter of that. If you can do that, I think the 7.7 should be relatively easy to do. But the 8.1, I'm a little bit more hesitant because it takes time to be able to climb up there, and I think April has pointed out there are like lots of hurdles and, of course, conditions that we still have to see whether the government can pull through before that can happen. But I think 6,500 is a strong support, and it should try to be able to hold prices right about either there, maybe slightly lower if on a worst case scenario. But if that happens, then these are the evidences that we talked about earlier could provide you a good reading to be able to pick up those particular companies into that set. In terms of the peso, as if we told you at the dollar earlier that there's a chance that the dollar may rally, but the dollar may rally I don't think it will be too tremendous. So if there's going to be any devaluation taking place into our peso, I think it'll be more graduated. So perhaps I've been hearing a lot of reports talking about 52 pesos at the end of the year. Am I right, April? Yeah. About 52. I don't think perhaps we'll get there. I'm thinking maybe to about 50-40 first, and maybe gradually, and maybe even an extreme at 51.50 if at all. But I'd be a little surprised if it will get to that particular level. And hopefully that these wide trading bands can provide many traders out there, just like all the stocks we looked at, should be able to give you good entries for especially those conditions where you see an unpredictable situation surfaces, you see stocks pull back. Please don't get scared. Use that as the opportunity that you guys were waiting for.
Now we move on to asking again our audience a question in our survey. So we asked, do you feel that you are spending enough time managing your portfolio? And 52% of you guys said yes, apparently. So good job. And 48% of you said no. So I'd like to throw the question to Marvin, of course. Again, it's still a huge part of our customers, 48%, who seems to not have enough time to manage a portfolio. What would be a good strategy for them?
But as you can see, it's like kind of even then, Ed.
Right.
It's about 50-50, 52-48%, kind of even. So more or less half of you think that you have enough time, and half of you believe that you do not have enough time. So, di ba, parang medyo the house is divided.
Right.
Yeah. But anyway, what I'd like to suggest is, even if you have time, or if you don't have much time, the critical thing that you have to do in investing is really to allocate your portfolio accordingly. Now, I think this presented this before. What you need to do is to, if you're younger, be a little bit more aggressive. An example here is you're an aspiring wealth builder, about 80% in equities. You're a little older, maybe more balanced because you have some responsibilities. And then if you're much, much older, you be a little bit more conservative because you're retired maybe, but you have a little bit still of equities because we live longer. So whether you have time or not, this is very important. Just allocate your portfolio, watch it, maybe once or twice a year. So, but let me answer each question, each side. Looking at your equity position specifically, if you have less time, I suggest consider equity index funds. that is where you can capture the flows and ride the overall market. As you've seen, the investing public has already moved to this type of funds. And I think this is a trend that is happening not just in the world, but starting to happen in the Philippines. And in the COL fund source, in the COL website, all of you account holders, if you have an account with COL, you can buy mutual funds already. And we have 4 index funds available that you can buy anytime. And I've checked them, I checked 2 of them, Philippine Stock Index Fund and Phil Equity PSE Index Fund. The 2 of them had a longer track record. In the other 2 only was launched in 2015. I suggest you look at the other 2, the first 2 first, because they have a very good track record and they've been performing well for the past 5 years. So if you have less time, consider more equity index fund. However, if you have more time in your hands, I suggest you listen to these guys. Stock picking. Get a little bit more excitement in what you do. Look at April's Calling the Shots, comes out once a month. And then Juani's Tech Spotlight, that's almost every day, comes out. And look at what stocks they're recommending. And these are the ones that you can spend a little bit more time on. So that, let's just simplify it now. Less time, index, and then you have more time. Look at the stock picks, and look at the calling the shots and the technical. For the technical, for more short term, but April, more fundamental. So you can choose which one, and then that can be part of your portfolio. So your portfolio will look like something like this. It really depends on where you are. So I just put here, if you're younger, you have more aggressive, you have more time in your life. You can continue earning, continue accumulate these stocks, and some put a little bit of index funds if you like also. And if you have you're kind of a little bit older, add or be more balanced in your portfolio. And if you're much older, you're a wealth manager already, and you can have a little bit of these stocks as well. So whether you have time or not, let's just simplify it. Let's simplify our lives. It's very complicated now these days with all of the information, all what's happening. But one thing is for sure, investing is going to help you reach your financial goals. And the way you manage your portfolio will depend on how you allocate them. And how you can achieve your goals will be how you can properly diversify your portfolio, pick the right ones, pick the right funds. We've shown you who they are, and you can continue reading the research reports in COL so that you can watch what stock picks are there. We update it every so often. And then you will be able to reach your goals sooner than you think.
Thank you very much, Marvin. And again, thank you very much to our dear panelists.